touch on Naspers today. Down 3% as we move towards a close. I'll get an update on it in just a moment. But headline earnings per share up 33%, pretty much in their trading range. They came out with that trading update before the results. What do you make of the story? Obviously strong growth coming from their associates in Brazil, China and Russia. And it looks as though that's where the story with Naspers lies going forward.
Yeah, an exceptionally good result from Naspers. Tencent released their results probably 3 or 4 weeks ago, so the market was well flagged on what the results were going to do. So I don't think there were any surprises there, and I would ascribe the sell-off today to general market weakness. But a superb result from them, particularly strong across their internet division, which houses Tencent. We saw 61% growth from that unit on an EBITDA level, and that's one of the reasons why it can justify the premium PE rating that it does have.
Do you hold Naspers? Let's get the disclosure out of the way.
Yes, we hold it across the board.
So it's always going to be seen in a positive light from your perspective?
Well, at this point in time, things might change in the future, but at the moment we calculate the NAV of about 425 Rand on the business. And when we look at it from a top-down perspective, if you look at the stats, the number of people that are going to use the internet over the next decade are going to triple, and Naspers, through businesses like Mail.ru, Tencent, is well positioned to benefit from that.
Do you think now that Google is being scrutinized by the European Union, that is going to provide some upside momentum for the likes of Naspers, specifically with their significant internet exposure?
Yeah, I don't think in the short term that'll have a pronounced impact from them. I think they're quite isolated in terms of the market that they operate in. But yeah, the business case remains strong for them. I don't think that's going to have an impact on them.
Simon, anything that, other than Naspers, that caught your eye on the market today and that we need to talk about on this desk?
I think we saw results out from Life Healthcare earlier on today. Obviously a maiden set of results following their listing. I think it was in June, and pretty much came in line with expectations. Management indicated at the time of the listing that they were going to see margin improvement. The business reflected that in the results. So on a normalized basis, the earnings coming through quite strongly, and a very good set of results from.
Would you allocate money if you look at Life Healthcare, Mediclinic and Netcare? A number of analysts have said that Mediclinic, from a valuation perspective, is the front runner, followed by Netcare, and then obviously the laggard is the Life Healthcare group. Do you agree, and do you have any allocation in this life healthcare space?
Yeah, I think the way we're seeing life or healthcare at the moment is that we almost in a super cycle for healthcare. Increasingly, you're getting people aging, meaning that they will need healthcare for a longer period of time. There's greater incidences of lifestyle diseases, and thirdly, people are becoming wealthier, and as they become wealthier, specifically in South Africa, we've seen a greater movement from the lower LSMs up to the middle and topper LSMs. There will be a greater requirement for private healthcare. So based on those three fundamental factors, we believe there's a long-term growth vector for that industry, and it's a sector that we want exposure to, and we have exposure to. In terms of the valuations, I guess that's what makes a market. As we see it at the moment, our preferred entry point would be Netcare. It looks fairly expensive, but I think over the next couple of years, as we see their 25 billion odd Rand's worth of debt unwind, that's going to be a significant kicker for earnings growth.
Are you not concerned about their exposure to the UK, and potentially, if you look at all the economic turmoil we're seeing specifically in the United Kingdom, when it does have to go through the austerity measures, will that not impact adversely their holding there?
I think generally healthcare is seen as a pretty defensive sector, and if there are austerity measures put in place and less funding for the national healthcare, it will just mean that people will need to go to
private hospitals.
Yeah, and they would benefit in that case anyway.
O'Hagan's has been bought. I don't know if you saw this. Famous Brands, if you take any note of this stock, has bought O'Hagan's Pub and Grill for an undisclosed sum. Just chatting about Famous Brands and where it's positioned, obviously did very well over the World Cup. Do you see there's potential in this company going forward?
Yeah, I think it's a wonderful business that's been built up, and probably the strength of the business lies in its vertical integration model, that if it has various franchisees, that it supplies them as well. In terms of the latest announcement, I think they actually put out something a couple of weeks with regards to it, and the CEO, Kevin Hedwick, actually had a history there. Perhaps that's one of the reasons for his affinity for the business, but it's certainly a brand that has fallen on hard times, and that does need some revigoration. But in terms of the overall picture for famous brands, it'll be a very small contributor going forward.